Hey everyone, welcome back to Will of the Market. Today we're breaking down UnitedHealth Group, UNH, who they are, what they do, how they stack up to peers, what's been happening lately with the stock, and what investors seem to be focused on. If you like clear, understandable takes, no jargon overload, buckle up, we're going in. Who is UnitedHealth and what they do? UnitedHealth is one of the biggest names in U.S. healthcare. Two main parts of their business: UnitedHealthcare, this is their insurance arm, health benefit plans, Medicare Advantage, Medicaid, employer plans, individual coverage. Optum, the services and operations side, pharmacy benefit management, Optum Rx, data and analytics, Optum Insight, care delivery and management, Optum Health. Essentially, they don't just insure people. They also try to control many pieces of how care is delivered. Vertically integrated. Their strategy: mix insurance risk with healthcare services and tech, data, so they can improve efficiency, control costs, and, ideally, not just react to healthcare inflation but get ahead of it. Peers and competitive landscape. Humana, strong in Medicare Advantage, age-weighted business, focused on older demographics. Cigna, global exposure, solid PBM business via Express Scripts, diverse mix. Peer key strength, focus challenge, risks. Humana, strong in Medicare Advantage, age-weighted business, focused on older demographics. Vulnerable to government reimbursement pressure, regulatory risk. Cigna, global exposure, solid PBM business via Express Scripts, diverse mix. Healthcare cost inflation, margin compression, regulatory scrutiny. Elevance, ELV, big Medicaid and ACA marketplace exposure, strong network. Centene, CNC, deep in Medicaid, strong scale. Where UnitedHealth stands out, its Optum arm gives it more levers to pull. With data, analytics, pharmacy operations, care delivery, they can try to manage cost trends more proactively. But that also means more exposure to operational risk, regulatory oversight, and cost of doing all that. Recent price action and what investors are seeing. Here's what's been going on lately with UNH stock and what's moving the needle. Stock drop. UNH has fallen significantly in 2025, approximately equals 30%, due to a mix of lowered profit forecasts, rising medical costs, especially in Medicare Advantage, and regulatory, legal worries. CEO change. Andrew Whitty stepped down in mid-2025. Stephen Hemsley, previously board chair, stepped in. That kind of leadership shakeup often causes uncertainty. Medicare Advantage performance forecast. Good news here lately. UNH expects approximately 78% of its Medicare Advantage members will be in plans rated 4 stars or higher in 2026. That matters, because high star ratings trigger bonus payments and better government reimbursement. Premium increases and margin pressure. UNH is seeking higher premiums next year to offset rising medical costs. The issue is medical inflation, cost of care rising faster than expectations, and pressure on the insurance side. Regulatory, legal overhang. Increased scrutiny over Medicare billing practices, criminal probe components, more political risk. Investors hate uncertainty, so this has weighed on valuation. On valuation, UNH is trading down from its 52-week highs. According to public data, it's somewhere around $348, recent quotes, with a 52-week range stretching up to $630. That means the stock has lost a lot. Analysts have mixed views, but many see opportunity in a turnaround, especially as UNH works to clean up cost issues, regain margin, and benefit from its high star ratings in Medicare Advantage. What investors should watch, and what risks remain. Here are the levers and landmines for UNH, in plain terms. What might go right? Star ratings and Medicare bonus payments. If they can keep or improve quality, 4-star plus, they get paid more, that improves margins. Cost control in Optum. If their service delivery and PBM, pharmacy benefit, divisions can scale efficiently and control costs, that offsets pressure from rising medical inflation. Premium increases. If regulators allow them to raise premiums appropriately, that helps. Regulatory clarity. Resolving uncertainties, billing investigations, government push, would help calm investors. What could go wrong? Medical inflation outpaces premium increases. If costs rise too fast, margins get squeezed. Regulatory, legal blowback. Fines or rulings around billing, overdiagnosis, etc., could bite. Leadership and execution risk. New or returning CEO has to deliver, high expectations. Sentiment, valuation risk. Stock has already dropped a lot. Expectations might be baked in, but if earnings disappoint further, there could be more downside. Bottom line in my take. To borrow a line from The Godfather, I'm gonna make him an offer he can't refuse. UNH has to make the offer attractive through performance and clarity. Right now, the stock may be pricing in a lot of risk, but some of that risk seems known. What's less certain is whether UNH can execute on cost control, keep Medicare Advantage ratings high, and calm the regulatory storm. I'd lean cautiously optimistic. It's not a sure bet, but there's opportunity, especially if you believe the long-term trend favors large insurance plus service integrators. For shorter-term trades, the stock looks volatile and risky, good reward if they deliver, big risk if not. For longer horizon investors, UNH could be interesting if bought near lower levels, given its scale, breadth, insurance plus services, and potential regulatory tailwinds if healthcare reforms favor insurers in some form. Thanks for watching Will of the Market. If you want, next time I can pull up a peer group comparison video, UNH versus Humana versus Elevance etc. with multiples, margin comparison, price targets. Drop a comment, hit subscribe, and remember, in the market, the difference between fear and greed is often just confidence.